Good morning, traders. It's Wednesday, February 24th. Taking a look at the charts, we've got the NASDAQ here, the QQQ. And if we take a look at the recent price action, a little bit of damage was done to the chart yesterday in terms of the market selling off and breaking a previous pivot low. Now, typically we want to see the market make a series of higher highs and higher lows, and there was some pretty big damage done. Lots of selling in the leading sectors really got hit across the board yesterday. We saw technology in general, get all the technology sectors and ETFs get hit real hard with a big, what looks to be, could be a flush out low, or there could be a change in the trend going forward. Now, if we zoom into the price action, you can see here actually the last 30-minute bar on the NASDAQ turned orange, and that's indicating that the upward momentum actually is shifting to more of a neutral bias. Now, the market was pretty oversold yesterday. It did kind of rebound and have a very strong close on the session, but overall, we're going to see it probably gap up a little bit this morning. The question is this just going to be a knee-jerk reaction and a bounce to the upside and we go to new highs, or have we really start to see a bit more of a breakdown? Now, if we look at the past price action, let's just take a look at what happened over here, where you have an initial first leg to the downside. Now, this is the big one back last year, but what happens is when you have a big leg to the downside and it breaks a previous pivot low, you can get these very strong rallies like we saw yesterday where it opens sharply lower, rallies up. It bounces for a couple days because it's an oversold bounce, and then it loses its traction and falls back down. We saw this back over here in September as well. Strong pullback, had a bounce back over a couple days, and then it continued to go lower and then traded sideways in this big range here for more or less 2 months. So looking forward today, we can see here we had a breakdown. We broke this previous low. It had a huge volume and ended up clawing its way back. So the big question is, are we going to see it trade in some type of range? Is it going to bounce back up here and then eventually fizzle back down, or is it going to start to trade in a sideways range and potentially work itself to break back to the upside and go higher? We don't know yet. No one knows. So we just have to let the market work itself out. Overall, the leading sectors all got shaken pretty good with a big bout of selling. And we need to see if that money is now rotating into totally different sectors. Potentially there's a new rotation where money's flowing into the market, and we'll just have to let the market decide where that is and show us proof, and then we can get involved with it. So the big question is how is this market going to play out over the next couple of days? Is it going to trade sideways or more or less pull back and start to have a bounce and then a pullback into a deeper correction going forward? Now, if we take a look over at, let's take a look at bonds. They're down about 0.5% this morning. Bonds continue to just go in free fall mode, which is a sign that no one is interested in or expecting the stock market to roll over. And this is typically a pretty scary sign when everyone is buying call options. No one's buying any downside protection. No one's nervous about a correction. That's when you get some of these very big pullbacks in the market. So things are starting to get pulled to an extreme to the sentiment wise, and I think the market is brewing here for something fairly significant. Now, if we look at where bonds are trading, their bonds are trading right back to where they were before the COVID spike and fear hit. So all that fear has completely dissipated out of the market, and we're back down. The bonds have more or less reset. And you can see how volume is starting to ramp up really big here. This is usually when you see extended long move to the downside and it starts to go parabolic more or less, and volume starts to spike. That's usually the sign that it is coming to an end and is going to get some increased volatility and a big reversal. So I am expecting some big price action in bonds, continued price action, likely some type of rebound, and that's likely going to coincide with some volatility, potentially some selling in the stock market going forward. Now, if we take a look over at the VIX down 1% this morning. Overall, the VIX remains pretty darn low in the grand scheme of things. Again, it's not showing real fear in the market at all. And when there's no fear in the market, usually that's when there's going to be some wave of selling that strikes and catches everyone off guard, although they shouldn't be caught off guard because you can kind of front run the idea that a big sell-off is coming. And we can see that by looking at all of our band sectors here. You can see how we're getting a lot of mixed signals. We're starting to get some downtrends. And so we're starting to see all the sectors weaken with this market. And we just really sit back and we're going to let the market shake itself out and give us some type of new setup. Now, overall, you can see these blue boxes. These means these shares are restricted. There were a bunch more yesterday. You can see the ARC ETFs, which are mostly all technology weighted, PBW, clean energy, which is has been a high flyer. TAN, I think, was yesterday, was also a blue box, meaning the market makers are restricting people from shorting them. That means just like when we see GME spike up, we see silver shares spike up on news, and you know it's going to collapse straight back down because there's a lot of selling. It's just the way the market goes. They make it very difficult to take advantage of a falling market, and sometimes they stop out from being able to short them. They do the same with the VIX ETFs. When there's a kind of a clear play, they do make it more difficult to make money off it. So they're protecting all the technology side, so people just can't run tech stocks down by shorting it, and that would crush the market because the market is very tech heavy, and if technology crashes, it's going to pull most of the markets, the indexes down and do a lot of damage. So that's why they throw these on here to try and protect the markets from stronger selling. And when you see these restricted, it's not a good sign. It means they see a lot more selling than the average bear sees than we see because they get to see what's flowing through the exchange, the raw data versus what we really see. So anyways, that's where we're at. Let's take a quick look over at gold and silver here. Gold down 0.4%. Again, I know a lot of people are all excited about metals going to the moon and silver, but I mean, when you look at it, I mean, we had a one-day pop in gold. It's stuck under resistance. It really is still a dead play at this point. If we look over at silver, it's a little more exciting because it's been trading. It's holding up near the upper end of this range through here, so it has definitely got an upward bias. It's got higher lows, higher highs. The short-term pattern here is bearish. We got a sharp drop. We got a bear flag. And if we look at the price action just a couple days ago, price gaps higher and then sold down. We'll see how that plays out going forward. The 10-minute chart this morning, in the last 30 minutes, we're just starting to see some volume pick up, and we're starting to see some selling. Looks like a little tiny bear flag on the 10-minute chart, meaning it could continue to move lower. And silver could still very easily go all the way down to this $24 per ounce level. So this is the silver futures. If you're looking at SLV, it'll be a little different. Let me pull up SLV just so you guys get a feel for it. SLV, if you were to look where that potential move could go, our initial move was going to be somewhere right around here. So around 21 or 22 with this new squeeze to the upside, that kind of moves it up here around the 22.30 area. So there's still quite a bit of downside potential. 23.80 down to 22.30 on SLV if that unfolds. So again, not a whole lot of excitement going on in the precious metals market. I know a lot of people are excited about it, but again, a one-day pop here and there isn't anything significant. We should be seeing gold, silver, and miners, all those really breaking out together, but gold and miners are just underperforming dramatically, not really showing any real commitment to this sector, believe it or not. Taking a look over at crude oil, it's up 0.5% this morning. It's gone all the way up to this $62, $63 target is where we are looking at potentially a long-term upside move based on this rally, this pullback, the Fibonacci extension brings us up to this previous high. So we've hit that, and you can see the last time we got to this level, we saw some big wicks on the chart. Of course, this chart gets pretty squished with that negative value. But if we look here, you can see how it had a little bit of a pop, a blow off, and then a reversal. We're right back at that level. You can see how big selling stepped in, and then we see it pop back up. So it's definitely a clear level. Not only is it a previous pivot high where it was clearly rejected for a massive sell-off, but it's also a Fibonacci 100% measured move, and that is saying momentum should stall here as well. So I think we could see the energy sector start to pull back. Energy stocks have had a huge run. If we look at the the XOP, which is the oil exploration. They've had a very strong run. They've been moving up the whole time when the NASDAQ has been moving lower. So we're definitely seeing money flow from tech into energy, dirty energy at this point, because clean energy is being sold off in a dramatic way right now. So we are seeing rotation from what were the leaders to potentially new leaders. And I think there's going to be a little transition here. It could take a week or two, who knows, for this kind of signal to clear up and give us a firm grasp on where money should be going next for the next buy signal in the stock market. Anyways, let's take a quick look over at Bitcoin. It's had some pretty big moves. Today up 4%, but yesterday was a pretty sharp reversal to the downside. We saw, I think it was down about 11 or so percent. Obviously, over the last 2 days, Bitcoin moved 22% from the high to the low, so very, very volatile. But again, that is normal for Bitcoin. How big was this last move over here? 27% move in 2 days. After it fully shook itself out, it was a 30% correction. So overall, in terms of volatility, it's stair-stepping its way up. It's in another consolidation phase. I had a $60 target on that based on this momentum move. Seems to have stalled a little bit before that. Wherever this consolidates out, we'll be able to recalculate where the next target is. We could go from these lows to this high, and then wherever this low may be. Now you can get an idea of where some upside targets are if you use a Fibonacci retracement. So this is what most charting softwares have. You use a Fibonacci retracement, you go from the low, and we go to the high, and you drag it over. Sorry, that's not the right one. Fibonacci retracement. It'll drag those lines of where price should typically retrace to. So this is the 38% and the 50%. Typically, you don't want it to go below the 50%. If it starts to get below the 50%, it's starting to do a little more damage. It's got a lot more downside momentum than you really want. The shorter the pullback, the more power it has to the upside going forward. If it pulls all the way down to the 618, it has most of the upside potential. Will only bring you back to break even after that point. So for example, we can see it's already come down between the 38 and the 50%, which is about the average. You're expecting it to come somewhere down to one of these levels or in between. So if we were to take that and use a Fibonacci extension tool, we can go from the low to this high. And because this is a typical retracement, if Bitcoin is to continue to go much higher, it should hold that level and it'll tell us our upside target. So if we crunch this down now, we can get rid of the retracement to clean it up a bit. You can see the next upside target is 62.5 and $73,500 on Bitcoin. So if this flags out and consolidates for a bit and starts another run, these are the next two levels where Bitcoin could go to. So hopefully that gives you a little bit of insight in how you can kind of forecast a little bit of where price should go. And obviously, depending on if this pulls back deeper, we'd have to adjust the Fibonacci extension down to where that new low is going to be, or if it ends up not going all the way down to the 3.8 or 5, it could go higher. But at this point, we know this is a level that it is already tagged, and it's between the 38 and the 50% retracement, which is a pretty good level. So somewhere in there is what we're looking at. Last but not least, let's take a quick look over at the US dollar index. Obviously, it's been in a downtrend, having a series of kind of bounces and pauses and bounces, and here we are in this bounce. We talked about it right over here when we had these three surges to a low. This is a typical pattern when you're in a trend. We're going to see some type of pause and bounce in the market. We saw the same thing over here, came down and went 1, 2, 3 surges to minor new lows after being very oversold from an extended sell-off, and then you go into a bounce and a pause. And so we saw the same here, 1, 2, 3, and then we got the bounce and pause. So the question is, are we going to see the dollar continue to bounce a little further and drag out more, or is it going to pick up speed and start to sell off? If it does continue to sell off and move sharply lower, that's definitely going to help, I think, precious metals in the long run. If we look at the weekly chart of the US dollar, let's just see where there's some support and resistance through here. Let's just draw a couple horizontal lines, right through here is going to be fairly significant. It was a major low. We had price trade through it and flip-flop and bounce off it and then break down and kind of trade through that level. You can see it also hit over here and had a bounce. So this is going to be, I think, a pretty critical line in the sand for the UUP ETF. This is supposed to mimic the US dollar index, and if we do break below this blue line, we could see it really pick up speed, and the next couple levels are going to be dramatically lower, somewhere down into these areas, the middle of these areas going forward, and probably the spike low as well. This is a spike low. It was also resistance, 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 and then finally broke through it and went higher. So that's kind of where those downside moves are focusing on. If we do a Fibonacci extension, let's just get an idea of where that momentum is going just based off this last rally where it reversed, it sold down, and then to this spike high, carry that forward. So it's saying that 618 is just over here, and then we've got the 100% measured move, which coincides with this blue line here, which is a pivot low, price traded through here, and that's going to be a potential level where it could quickly sell off and hit that level, and then from there you could see probably a strong oversold bounce going forward. I think this whole area here is going to be very critical for a long-term line in the sand for the US dollar index. If you look at it, if we break below this low, the next major levels for the dollar are going to be, way down here. It could have a real free fall, and that would be huge for precious metals and could spark a huge run. So obviously this level here is very significant. If broken, the dollar is going to completely devalue, and we're going to see most likely the stock market potentially rally in a big way. Potentially metals should rally in a big way. A lot of times what we're going to see is we could see the dollar fall in huge value when we see the stock market rally. Well, just keep in mind this dollar could fall 14%, and just remember, even if the stock market rallied 13% to all-time highs, another 13-14%, you'd really just be breaking even in terms of your overall net worth, because the currency's fallen 14%, your stocks went up 14%. So you got to keep in mind, a lot of times you're going to see the stock market clap or rally, and you're going to see the dollar devalue. And if you never leave the country and you stay in your own currency, it's fine. But if you're an international trader, traveler, it definitely plays a big difference, the currency value, when there's these massive swings in the value. Anyways, a longer video than normal today. That's it for now. Talk to you soon. Bye-bye.